Good morning, everyone. Welcome to June 4th Market Minute. I'm John Hopkins, president of Invested Central. Right now, we got the Dow futures up 10, S&P futures are up 4, and NASDAQ futures are up 9. Asian shares were lower while European shares were mixed overnight. Futures were deep red Friday morning ahead of important economic data. Jobs numbers were disappointing, putting additional pressure on the market. By the time the market closed, all of the major indexes had fallen sharply. Today we'll get factory orders at 10 a.m. with the market expecting a reading of 0.1%. Dollar General will report its earnings today with the market expecting 6 cents per share. On the S&P, we've got the 20-day moving average at 1328, the 50-day at 1367, and the 200-day at 1284. The S&P closed at 1278 with support at 1258 and resistance at 1328. Traders were on pins and needles ahead of Friday's jobs report, and with good reason. The numbers came out much weaker than expected, setting off a fresh bout of selling, with the S&P rifling through key support. Should the selling continue here, the bears will be aiming for the January 3rd low of 1258, wiping out all of the 2012 gains. Meanwhile, with all the recent damage, the bulls will need to recapture the 20-day, now at 1328, or continue to be vulnerable to even lower prices. The yield on the 10-year bond moved to all-time lows last week. This, in turn, put additional pressure on equities as investors fled to safety. Now the fresh lows have been hit. There's no telling where yields might go, but we do know they can only go as low as zero. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.